You're listening to the Practical Wealth Show with Curtis May.
Hey, everybody. Welcome to another episode of the Practical Wealth Show. Let me tell you, this, as I record this, is like before Memorial Day, the end of May. I think I have been home. I don't know if I've been home 10 days in the month of May. So it's been a whirlwind. Right now, as I record this, I'm in Atlanta for a master mentor meeting in the financial advisor space that I am. So it's great to, be around other brilliant people and talking shop and getting new ideas. And, it's funny. I realize that, I'll go to these things in student mode and people are like, wow, yeah, it's a good idea. I'm like, okay, maybe I do know a thing or two, becoming an authority. I don't know. But anyway, so I've been here in Atlanta for a couple of days. I came straight here from Denver because of bad weather in Dallas. I couldn't go back to Philly. So I was like, well, we can't get you back to Philly. So we can send you to Atlanta, flight leave at midnight. Because I was in Denver for another conference on, kind of advancing your reach through. It was interesting because there was a bunch of people that need to get their message out there. And it was with the great Pete Vargas on, it was called Reach Live and you'll see some of the stuff because we did some YouTube interviews. So I'm going to start going live on Facebook. So we may just do a Facebook group. I'll let you know. I got to figure out how to do all that stuff. I have that, but I don't really work it like that. And then lives on YouTube. So, go to our YouTube channel and subscribe. And we're going to start to, because there's stuff, I do a lot of interviews and, there are thoughts I have during the week or lessons I learned where I can draw on the screen and really, show some of the ideas we're talking about. Because a lot of it's visual. I'm visual, so I like to draw stuff. So I'm working with clients. I'll draw stuff out because I think in pictures. And I think it's good to get stuff across. So if what I found is my unique ability is I'm a nerd. I tell my kids I'm a cool nerd because I was a ball player. So, I was smart, but, and because to me, when I was a kid, being dumb wasn't cool. So I was all city and basketball in Philly, but I could read. I read a lot, I was technical. I could always figure stuff out. I would binge listen. I remember when I was, my daughter hates when I say this. I did this. It's something called a Kolbe, Kolbe, and you should do it. You need to figure out what your strengths are because you have to play in your unique ability. I'm going to do one. There's one for kids, right? And you can everybody's wired differently, right? And so, I find that I was a fact find, which is there's this category called fact find. So I'm a 7 out of 10 fact find. And which means if I'm stressed or I have a problem, I automatically go in research mode to figure out the problem. And when this is at Kim Butler's event, who you heard on the show, I was like, and so Kim told me what all that stuff meant. I was like, wow, that explains a lot. Okay. Because I was the type, so I remember being in elementary school getting interested in rock collecting. So, which is funny, my little one, who's 7, Natalie, she got into that. So I knew, quartz crystals. I was collecting stuff. I knew what is it? I don't even remember now. It's like crystals, metamorphic, the 3 types of rocks, lava, the different stuff. I don't even remember it now, but I was into it, and so within 2 weeks, max, I read every book in William Henry Harrison Library, which is where I went to school at here, elementary school. And the following year, 6th grade, I got into astronomy. So I literally binged, read all of the books, every book on astronomy in our little library. And then I pointed out to my teacher where it was something crazy like, oh, Uranus has 9 moons and not 8 and whatever. And I point out this error in this book as a 6th grader. So, I've always could figure out obscure information. I was interested in getting my amateur radio license. I would listen to shortwave radio. I mean, I would get into all these things. Like people were looking like I was crazy. Where are you doing all this stuff? Couldn't get an amateur license because I was trying to learn Morse code, but I didn't want to do it. So this was like late 70s. Everybody was in the CBs and then Citizens Band Radio. And I had a shortwave radio station in my room, and I had a radio station with an antenna that turned on the roof so that I could point it and talk to people on what they call sideband, which was similar language to people that do amateur radio. We would shoot skip, which was, I don't know, we're getting way too nerdy on this, but into the shooting your waves and bounce them off the ionosphere. So where you might be able to get 50 miles regularly, I would talk to people in Nova Scotia, and, I would call CQDX. Anyway, so you see that I could go into the rabbit hole. But the point is, I found that I could, get a lot of information, and then I could draw it to you on a napkin. So what I've learned is to play in the, financial education world. And, I'm actually an insurance-based financial advisor. So people are like, well, what do you do? They'll call me. I was like, yes, I'm insurance licensed. And, so the infinite banking or the becoming your own bank or private reserve is an insurance-based strategy. So you need to be able to do that to help people implement. So just so you know, that's one of the things that I do. I don't give investment advice on, equities, because I don't want it. I was a registered rep for 15 years, so I understand that stuff, but I'll refer it out. I know some people, I don't like the market because I think it's too much. There's too much manipulation going on. So I'm not a huge fan. I don't put any of our family's funds there, but I understand how they work. So I know what I'm looking at when I'm reading stuff, but I just I don't do it. I'm gonna kind of continue, folks. You got to educate yourself. You've got to invest. So I've been on the road. Well, the first one was we were in the Bahamas, so that was off the hook. So it was I wanted a trip with one of my insurance carriers, and it took us to the Grand Hyatt in Nassau, which was awesome. We were able to take the family down, so that was great. And I was home 2 days. Went to Denver, and I was supposed to be home for a day, and then go to Atlanta. Well, I've been out of the house really, and I do this for the family because I can't. One, you can't expand your own vision. So that's why you have to get out and get to masterminds and get to, if you're interested in real estate investment groups. If you're in sales, you've got to go to conferences and Tony Robbins and Grant Cardone. You have to do that kind of stuff because steel sharpens steel, and you have to get around other people out of your comfort zone. Okay. And so that's one of the things that you must do to grow. You have to grow. Your income won't grow until you grow. All right. So now I want to continue on the expenses part of the talk I had last week. So this is something I learned from, so I'll give people credit, Garrett Gunderson. Okay. He's got several great books. So one that early on that really changed my thinking was Killing Sacred Cows. He's got a book called The Rockefeller Method, because I met him and I said, hey, we're a lot alike. We were talking, I like his style of how we, present stuff. And so I've got to put we got a picture together somewhere, but I thought he was a brilliant guy. We were at the Prosperity Economics Summit with Kim, and he was a featured speaker. So we got to chat a little bit, and the way he's doing stuff confirmed that what I was thinking about, I could do, because he does a lot of the same stuff. So that I know how to do. I just haven't really talked about it and packaged it. So, you're going to actually see some stuff come out, because we're going to put together a coaching program on cash flow management. Because as you know, that's where I think the rubber meets the road, right? But I think people need help and they need accountability, and people have been asking me for it. So you asked for it, you got it. So we'll just keep a listen out. So we're going to actually roll out a membership program so that we can build a community and, of people that are taking control of their finances and, being able to learn stuff so they can teach their kids. And I want to be able to build a community so we can impact, so that we can build for our families multi-generational wealth. But you have to have wealth and wisdom. So it doesn't, hey, you're never going to learn in school. So I know that some of the stuff I share, one of the reasons I did the show is that I don't believe that you'll ever hear it unless I tell it to you. So I think that's important. But beyond that, how do you educate the next generation so they can, be free and take control of their life? So I think, as you know, the rubber meets the road with cash flow management. So what I'm going to do is we're going to talk about expenses and the 4 categories of expenses. See, expenses are bad. So, there's 3 types of money. There's accumulated money, there's lifestyle money, and there's transfers, right? So most people think about transfers. Okay. No, I'm sorry. They think about lifestyle. So when they think about, oh, I got a budget and nobody likes budgeting and they got to cut back on stuff a la Mr. Ramsey and you pay cash for everything. And, you got to live in a sackcloth and so that you can, stop, David Bach, the latte factor. And you have to win by giving up stuff so that you can save money, move it to your accumulated money and put your money at risk in the stock market. So, we don't really believe that, right? But you do have to pay attention. If you don't manage it, it can't grow, right? That's what gets measured, gets done. Okay, so you have to measure your stuff. So when you're looking at your expenses, and I'm gonna show you I think we talked about the bucket system previously, but so I want to go a little bit deeper on that. So there's 4 categories of expenses. Okay, so there's destructive expenses, consumptive expenses, protective expenses, and productive expenses. Okay, so all expenses aren't bad. So I think you have to look at that. So let's talk about that today. So destructive expenses are things like, these are vices, okay? Smoking, gambling, drugs, porn addictions, overdraft fees, any expense that has a negative effect on your life and will push you towards poverty. And so I remember one time this is about 20 years ago, I did a workshop. So I met with this family. Hey, we want to we want to talk to you. So I said, all right, let's fill out this budget worksheet. Let's see where your money's going. So I'm seeing this shortfall. I'm like, wait, there's a gap here. Where's going? Where aren't you telling me? Well, they spent about $400 a week, hear me, playing numbers. I was like, what? They add up by the day, playing the numbers. And I said, listen, I'm going to smack you. Are you crazy? I mean, have you hit? And so that is a big hole. And so here's another story. So I'm at my barber. I sit there. And so this is in Philly. He plays the number. Then it's 2 different street number guys. There's numbers running. So this is like the underground stuff. So I told you I'm from North Philly, right? And so the street guy. So he's like, I forget the even terminology now, but he had 15 and box this and that, and so he's playing, $5, $10, $15. And that was the day I was there. But I know he did that for every day. And I just told him, I said, listen, this is why I was still doing mutual funds. I just said, listen, if you gave me let me help you invest the money that you plan these stupid numbers every day, you would have the money you were trying to hit, and gamble. Because by the time you hit and you get $1,000, now you go to the bar, you spend it. You go to a party, you run in the bar, buying drinks. When you really look at the math, all you've done is at best broken even. But because you give it, either you play it again, you put it in, you get some money back because you hit every now and then. So you feel pretty good about, hey, let's do this again, and I can hit. But I know somebody who's probably listening to this that had a big windfall. But I'm telling you, don't get used to that. Don't get cocky, because you'll give it back. So that is a destructive expense. If you're going to gamble, I was in Vegas. I didn't even go to a casino, but I used to like to get a $5 blackjack table, but I learned the hard way. I listen, I want to pay, here's $20, $50. And if I lose in 5 minutes, it's over. I'm going to a buffet and I'm out. I'm not going, let me go back to the ATM so I can, get some more. I'm on a roll. That's stupid. Okay. Your house always wins. Okay. You're not going to beat the house. All right. You're not Doc Holliday. So those are destructive expenses. So you have to be aware of that. You have to get help and eliminate destructive expenses. I've seen alcoholism and gambling destroy families. I've seen that firsthand. So the second type is consumptive expenses. So this is what I call lifestyle money, vacations, flat screens. These expenses are fun and they build memories. They don't build assets, but I don't think you need to stop. You just need to, kind of rearrange them. So, one of the things that we talk about, sometimes you just pay cash from, don't go into debt. Okay. And so it's funny. I just got a great definition of debt. So write this down. So what is debt? Okay. Because people say, I want to get out of debt. You really don't. Okay. If you got $100,000 in cash, you got $100,000 in debt, you're not in debt. You have debt. So let me give you a definition of debt. Debt is a financial obligation that the only way you have to pay for it is money you have yet to earn. Okay. So I was talking to a couple that we're working with that called, that reached out to me from the podcast. And I want to get rid of this debt and da da da. So I added up. And I was like, wait, let me show you something. Let me do their balance sheet. You're not in debt. You got rental properties, you got assets, you got, 401ks, money and pensions, some savings. And so when I added up, they had like a $1.5 million worth of assets. And then what were their expenses? It was like maybe $500,000 or $600,000 worth of expenses. And 300 of that was the rental, like 3 rental properties. I'm like, y'all not in debt. And then I add up what she was, the real debt was like $19,000 credit card debt. I said, okay, we're going to work. I can get you out of this in less than 2 years, okay, with the same dollars. So we put together a plan to do that. But what she do, but you're not trying to pay the house off early. Don't send extra money to pay off. Why would you pay off the rental property? Your tenants are paying it off. See, so don't get caught up. Don't believe the hype, as public enemy would say. And in terms of where you are, because the information you're getting is from banks trying to tell you what's important, so you give them your money. Okay, so don't fall for that stuff. Okay, and so the other thing is lifestyle stuff. Is you've got to pay attention to what are the top 5 transfers, how you pay money for major capital purchases, right? So a major capital purchase, let's define that, write this down. Anything you can't pay for in full with monthly cash flow. Okay. So if you put something on a credit card and you can't pay it off the end of the month, that means you can't afford it. So now you're in debt because you just spent money you have yet to earn. Okay. So you got to get control of yourself. You got to get control of your life. So, but I want you to live the best life you can today. So I think you should go. I don't think you can grow your income unless you take more time off. So you need to go on vacation. What are you working for otherwise? So that is all good. You just got to plan for it. You got to set aside money for it. This is what we use the private banking or the private reserve for. So if you got a big ticket item, then why don't you borrow, leverage, collateralize your cash, use it, and then pay yourself back with interest. See, so you can do it. Do it so that you are always moving forward with your personal economy. The third type of expenses is protective expenses, right? And so that's what I call playing defense, okay? And so these are insurances. They're used to protect property, your human life value, which is life insurance, which is, most people are underinsured. If you're saying, well, I need insurance. Yes. Okay. And so what you should do is if you're like under 40, if you take your annual income and multiply it by 20, if you don't have that, you're underinsured. Okay. Let me just put it out there. Now, and so when we help people with that, I use term insurance for that. There's people say, oh, should I get term? I don't want a whole life. Term is a waste of money or whatever. Term is wonderful. Okay. And so you make sure you get it with a company that's convertible to good whole life, but I do lots of term. Okay. Matter of fact, everybody I talk to, we make sure they have human life value. What I'm starting to do is I'm going to people, your number one thing you got to protect is your income. So I'm going to get somebody, I'm going to talk about disability insurance. And I want to start if you're working with me, we're going to start talking about disability and protecting your income. I had a person that had it was crazy. Somebody fell on them out of a window or something like that. And they were hurt, but they had really good disability insurance. They have, disability age 65. So they have good cash flow from 2 different, lifetime disability policies. So that's I was like, Curtis, you're not doing people a disservice. I have to talk about this more. You got to protect your stuff. If you're renting, you got to have renter's insurance. Homeowners, we did that show with Sabrina. And if you go back and talked about how to protect your stuff with Jason and Sabrina, on that kind of stuff. You know how it works. You got to make sure it's covered. Sabrina reviews policies because they're, sometimes some companies are trying not to pay, and so you got to, it's a contract. You got to make sure that it does what it's supposed to do. So, protective expenses include liquid savings of 3 to 6 months of your expenses. That's a protective expense. Savings is an expense. Okay. And medical insurance, emergency preparation, do you have a generator? Do you have, water? Do you have, 2 weeks of cash in your house? Those are all, what I call planned defense. I'm not wearing a tin hat as I say this, but you want to think about that. I think about that stuff. Okay. And the last one is productive expenses, right? And so productive expenses are expenses that allow you to increase your cash flow. So for example, if you are in business, we've added an expense virtual assistant because I've been growing and I need to, and so now I'm thinking, do I need somebody in the office? So it's like, you need to get help. You cannot get rich if by yourself. Okay. You need, because you don't know everything and you don't want to work all the time. So that's a good problem. So you got to grow. And then Grant Cardone says you're going to have new problems. You're going to need help and service help. And, I'm taking this one funnel away challenge with Russell Brunson. And sometimes you'll get caught up in all the internet marketing. It's like, and he says, look, it's not how, it's who. How do I do Facebook ads? I don't know how to do Facebook ads. Who knows how to do that? Okay, how much? All right, done. Go ahead, go to work. Need to work hard. I want to get some help. And maybe, I don't want my wife to worry about cleaning the house, for example. And so I want to create a frictionless life because we're both in business. So, if you look at what your time is worth, I had somebody tell me unless it's therapy, this is Tom Hopkins said, unless it's therapy, washing cars and mowing lawns, you need to hire somebody to do that because that's below your pay grade. And so you need to, in our economy, is you doing your unique ability, and then you can hire somebody else to clean your house or do your bookkeeping. And, you should learn it first, but then you want to hand that stuff off. And that's, now you're paying somebody, but that's what helps the economy go, but it helps you become more productive. So those are productive expenses, right? And so hiring a great employee assistant, paying for education. So, this month, I put out money which were expenses, which I did deductible. I can write them off. And I've paid money. That's what I call a productive expense because I will, things I'm learning will help grow my revenue. So you want to look at because they're going to enhance your life now, they're going to enhance your life in the future. It doesn't dissipate like consumptive expenses, that will lead to poverty. When you invest in productive expenses, they lead towards profits and prosperity, right? And so, I use the private reserve using the whole life to pay for those big ticket items. And then out of the new productivity, then, we recapture that money and then we just keep recycling. So the goal is I want you to get out a sheet of paper and I want you to list out your email me. I'll send you a budget worksheet. But then what you want to do is you can fill in the answers. And I review these with people, but what you want to be able to do is classify them by that. Do I have destructive expenses? What are my consumptive expenses? Am I buying stuff I can't pay for out of monthly cash flow? What are my protective expenses? Sometimes you need to increase your protective expenses because you're leaving yourself with exposure. And then, look at your, like one of the things, you look at your next quarter coming up and what events, classes could you take, books you could read, courses you could buy, which is an expense, deductible expense, mind you, that would allow you to, grow your mindset, increase your sales, become a better salesperson, marketer, teacher, that you can grow. I agree with a quick story. I told a person who worked at a credit union, one of my clients, like, we got to find you more money. Well, and they did loans. He said, well, do you pay? They don't pay me more for, if I get no loans in or if I do 15 loans, they don't do that. I said, I don't care what they do. It's not about the money. You should go out in the community and I'm going to give her some ideas how to do this, is teach financial literacy. If you bring more people into your credit union, just because they're complacent doesn't mean you have to be complacent, right? Because it's not about what they're doing. You have to run your race. So you're working and getting skills so that you can get better. Folks, if you got to work harder on yourself than you work for money, because there's things that you can do outside of that. And you just need the skills of doing workshops, of teaching financial literacy. Because if you can prove that you're doing X amount of business a month, guess what? Somebody else, you can show a track record of success, and somebody will value that effort and pay you more. Remember, your income is in direct proportion to the value that you bring to the marketplace. So if somebody else doesn't pay you, they don't recognize you, somebody else will recognize that. See, folks, somebody always needs somebody to sell their stuff or help them grow revenue. And because most people, I tell kids, and I'll end with this, is that I was doing this class for these 15-year-olds. I did a financial literacy class. I said, listen, I give them a book list. I said, you have to work harder on yourself than you work for money. Your income is in direct proportion to the value that you bring to the marketplace. Stop looking for somebody to increase minimum wage. And, Congress, you can't legislate success. And so people think, well, if they work hard, they're going to exploit the workers. That's nonsense, okay? Because that means you don't believe in free enterprise. So somebody will hire you, or you need to create your own work, better yet. Because true security is the ability to produce, but somebody will recognize that. I told the kids, I said, listen, if you just show up and work hard, guys, pants belt up, pants around your waist, not dragging off your butt, and you show up and work hard, you will beat like 80, 90% of the people out there, because most people can't even do that. Most people are sorry. Okay. And so if you do that, you're ahead. So if you show up on time with a good attitude, you will move up. Stop waiting for people to tell you what to do and look for problems to solve. And then now if you're engaging in personal development, now you're in that top 10%, and you will outshine just because you learn to engage in critical thinking, and, you're got a good attitude, and you understand customer service. You look people in the eye, you smile, thank you, please, all that kind of stuff. Okay. And little things that are not hard will put you ahead of the pack. Okay, so folks, go out there, list out your expenses, eliminate your destructive expenses if you have them, get control of your consumptive expenses, protect yourself, and go out there and be productive. Okay, folks, that is where the rubber meets the road. That is how you grow month over month, quarter after quarter. So I don't talk about the year. So you got to do it daily, and then you'll have a good year. So little course corrections, it's the daily decisions that you make that in the moment they don't seem important, but if you string together a bunch of good decisions, that will point the trajectory of your life in a positive direction. So go out there, make it a prosperous day. This is Curtis in his hotel room in Atlanta. We're out. Take care.
Thanks for listening to Practical Wealth. To access the show notes and resources, go to practicalwealthshow.com. To get your questions on the show, go to practicalwealthshow.com. This show is for entertainment purposes only. Before you make any investment decisions, consult a professional. This show is copyrighted by Practical Wealth. Written permission must be granted before syndication or rebroadcasting.